Hey everyone, welcome to Toast and Topics. We hope you are all having a wonderful March. The leaves are just starting to appear on the trees here in DC, and it seems that there is some change afoot.
Yeah, and there are a few places where change is more evident than in Japan, where the country's central bank, the Bank of Japan, raised interest rates for the first time since 2007 in the face of high inflation. And that's a problem that the country has not had for nearly a decade.
Yeah, Japan has faced economic difficulties at a broader level too. It had a recession in 2023 and was surpassed by Germany as the world's third largest economy, a position which Japan had held for over 15 years. So Japan is a country that we've done a deep dive into already, just a few months ago on Toast and Topics, where we discussed the country's unique monetary policy of yield curve control, which was a push by the Bank of Japan to control the shape of its yield curve by essentially setting quote unquote fixed bands of acceptable yields for short and medium term rates. Some of you may remember that one, and you may want to refresh yourself on the topic by listening to that episode. But as Sachin was saying earlier, just this past week, the Bank of Japan raised its interest rate target on overnight loans. And again, this is a rather historic development. And so we thought it would be great to just revisit this topic and get a bit more detail on it from someone who really knows what they're talking about here.
Yeah, and with that, we are really excited to welcome Revant Ranjan to the show. For context, Revant graduated from Dartmouth College in the class of 2021, where he has dual majors in economics and Japanese language, as well as a minor in statistics to top it all off. And after graduating, he moved all the way across the world to none other than Japan, where he's been working at a large international bank as a derivatives trader for the past 2 years. I personally had the pleasure of taking a class on monetary policy with Revant back in my sophomore year of college. I don't know if you remember that, Revant, but already at that time, I knew you'd be a pretty cool guy to host on a podcast, and little did I know we'd be here today. So, Revant, welcome to the show, and thanks for being here.
Thanks so much, Sachin. I think you did a really good job just covering everything. And in fact, I think that was Econ 32, right? With
That's correct.
That's right. Yeah. So that class actually, I think we all got to choose a country to follow, like its macroeconomic policy over the course of the semester. And I think at the time I also chose Japan, which is pretty funny because I didn't realize I would be here talking about it again in like 3 years.
So let's start, Revant, with some questions on you before we get into the Bank of Japan itself. So you've had a very unique career path thus far, and I think it would be great if you could tell us a bit more about your background, what sort of topics interested you academically back at Dartmouth, and what led to your decision to live in Japan and pursue a career in finance.
Yeah. So, as you mentioned, my background was always, an even split between, studying economics and then also doing Japanese language, which at our university, foreign language is just one of those requirements you get written off with your high school, like, equivalent of some foreign language. But for whatever reason, I decided to pursue Japanese in my first year of study. I took the study abroad program and actually ended up here for a summer
Hmm.
where I really loved my experience. I thought the country was like so amazing and unique in a variety of different ways. And, I wasn't entirely sure that I would be ending up here as part of like my professional path, but
Yeah.
it was, I think, COVID that sort of served as the catalyst for that. It was a really weird time. I'm sure like you guys remember like being in class, right? Remote and doing this whole Zoom thing. In fact, we're on Zoom right now and it's kind of giving me like a flashback to that time. Um, yeah, I haven't used Zoom since then, honestly. Like this is the first time I've opened the app. But yeah, no, it was a unique opportunity. It allowed me to cast a really wide net. I was interning at a like M&A advisory bank in Boston and actually had a return offer there, but then had also applied to this role overseas, which I ended up choosing ultimately because I think part of it was that like wanderlust. I wanted to get out, leave the house, and go travel somewhere. But I do think that the background I had pretty much prepared me exactly for a role like this, right? between the Japanese language ability and then sort of the whole econ math kind of background. Trading in Tokyo is pretty much, I think, where I was supposed to be. Um, yeah, so that's sort of how I answer your question about how I got here.
Yeah, that's wonderful. If you can talk in general terms about some of the, cool experiences that you've been able to have trading, that'd be great. But, otherwise we can also get your thoughts on just what it's been like being in Japan. It's known for having a really unique, differentiated culture. So do
Yeah.
with that what you
Yeah.
will.
Yeah, thanks. So, without really tripping any of like the HR wires, I think I'm gonna stick to sort of general like what my day looks like.
Yeah.
I think there is a bit of a stereotype when it comes to work culture in Japan that people work very hard here, and I'm not gonna say that that's like too far off from the truth. I think that that's pretty accurate. Everyone I know here works pretty hard, but whether you're in, I mean, as long as you're not on the West Coast, I feel like that's accurate for pretty much every part of the United States too. So people work very hard everywhere.
Hmm.
But yeah, in Japan, I think it definitely is like part of your life, like a bigger part of your life. Because like typical day for me, wake up at like 6 and get to the office at like 6:30. Markets people are typically on the earlier side because we've got a lot of like either content to push out early in the morning or you've got trades to get ready for.
Yeah.
With the market opening here, uh, local time like 9 a.m. We have plenty of time then in the morning to get stuff together, and then we'll just be trading. So my role is an equity derivatives trader, but specifically I look at things like index arbitrage of Japanese equity indices,
Hmm.
and I trade sort of principally, as opposed to like being an agency trader facing like clients and stuff like that. But yeah, no, so it's really cool. The trading floor is not I wouldn't say like like the New York Stock Exchange where there's like a ton of people like walking in and out and stuff. It's a bit more like calm. You've got like kind of wide open space where people are sitting in front of their 6 screens and talking every now and then to the people sitting beside them. We have kind of like this open floor plan. But yeah, no, I think it's super dynamic environment where people are really collaborative and you're constantly hearing like conversation ongoing between people sitting by each other and it's very lively. One of the nice things about Japan is that we actually have a lunch break in between the market sessions. So the markets
Okay.
are open from 9 a.m. local time to 11:30, and then there's a AM cash close, and then you have an hour where the cash market is closed. The futures market will still move, but with the cash closed, you see less like activity, of course, because people are not like arbing, index futures versus the underlying. And then it'll reopen at 12:30 p.m. until 3 p.m. But yeah, so that's the day, and then after 3:30, whatever, we'll basically just be looking at like booking trades and cleaning things up, checking out the risk, you know, taking some time to do some research if we've got some ongoing trade strategies and meetings, logistics, whatnot. But typically, I get out of there around like 6 or 7, and then you know we just stick to those hours sort of like during the week, right? And then on the
Yeah.
weekends, as you know, it's definitely much more free as it would be for markets roll anywhere.
Okay, that's a really helpful overview. So thank you for diving into that a bit more. So, pivoting a bit to what the Bank of Japan has been doing recently, we started off this podcast by noting that they've made some significant changes in their monetary policy, namely starting to raise interest rates. But it would be great to get your take on what prompted this change. Having been there in Tokyo on the ground, watching the build up to it. And then also, if you could describe what exactly Japan was doing in terms of its monetary policy before this point, that would be helpful too.
Yeah, yeah. So as you guys pointed out, there was a pretty monumental change in the way the BOJ runs its monetary policy earlier this week on Tuesday. And to sum it up, I think there were three major takeaways from what the BOJ decided to do this time. Number one, and probably the most like apparent, is their exit from ZIRP, the zero interest rate policy. The official new short-term interest rate policy is to basically allow those overnight rates to float between 0.0% and 0.01%. So rather than like, NERP or whatever, negative interest rate policy, we've
Hmm.
gone into sort of like, I don't know, like slurp, slightly positive interest rate policy or something like that. And we're dealing with this, in the wake of sort of a unprecedented uptick in inflation, which I'll also get in on. But the BOJ's official take, at least as translated in English, is that it has come in sight that the price stability target of 2% will be achieved in a sustainable and stable manner. And the large scale monetary easing measures that the BOJ has taken have, quote, fulfilled their roles, right? So on the back of this take from, the current BOJ leadership, I think they felt like it was a good time to sort of exit this negative interest rate policy regime, and then, bring the rates back to normalization. So that's the number one and probably the most apparent. The second
Hmm.
thing would be sort of their abandonment of yield curve control. So yield curve control is basically the BOJ's like sort of experimental innovative policy of protecting a like benchmark yield on the 10-year JGBs, right? By buying or selling, but in most cases it's buying JGBs in order to maintain sort of a low enough yield that it doesn't exceed like some critical threshold. So
Hmm.
sort of the history on that threshold, um, they had tried to keep it at like, 10 basis points for like the longest time. And then last year they widened that, right, to a band basically above and below, right, flat by like 50 bips, right? And then they widened it again to above and below flat by like 1%, right? But, the pressure was on basically the selling of those bonds, right? So the government would be stepping in and constantly, extending their balance sheet to buy more of those JGBs as a way to sort of keep that yield low. And they, for whatever reason, have sort of pegged this 10-year tenor as like the critical tenor over which
Hmm.
they must be sort of defending the yield. And I guess the idea behind that was sort of to control the shape of the yield curve in order to suppress the shorter medium term rates by like looking at, sort of the overnight, which I think are more, impactful towards corporate borrowers in Japan, while also, making sure like, there is sufficient yield in the 10-year space, which would, sort of not depress the super long yields, and thus allow for like pension funds and life insurers to still, earn like a decent, rate of return on their corporate bond holdings. So it's like this balancing act of making sure, the shorter end of the curve doesn't go up too high, but then also, you have sufficient yield on the far end of the curve, but not too much, you know what I mean? And so they were doing this by like, buying JGBs across the 10-year tenor, um, buying and selling. And now the new policy is,
Hmm.
um, there is no band. So the BOJ has said that they are going to keep this accommodative policy for, the foreseeable future, which is super vague. And I think it's intended to be that way because they want the market to think that there is this possibility that like, their big balance sheet will step in and be like, a backstop for those yields when it needs to be, but they have not stuck to a number, right? So yeah, it is sort of like a less toothy change because last time they widened the band to 1% plus or minus 1%, the yields actually never quite got to that 1% threshold. The selling pressure on the JGBs never was so overwhelming that they had to buy past 1%. In fact, those yields have hovered at around 70 bips for like the better part of the year. And that's just been the natural mechanism of the market driving that, not so much the BOJ, as it used to be, right?
That's really interesting. And with all of that, I find it pretty ironic that despite all of this monetary stimulus over the years, growth in Japan has still been painfully low, as you just kind of noted. For example, in the last quarter, I had read that private consumption fell by 0.3%, which was far more than the estimate of a 0.2% decline. And it's already surprising that they're forecasting declines in the first place. So, how should we be thinking about the drivers of that?
Yeah. So I think, you know, this kind of decline in consumption is inextricably linked to sort of like what's going on with the real wages here in Japan, which, you know, sort of leads us into talking about what's gone on with inflation. And I think it's good to talk about this because it's sort of the impetus for this entire change from the BOJ in the first place. And I think you know, what was unique about the things that drove inflation this time around is that it was happening all over the world, right? Like you guys had inflation in the US. Like what was it at its worst in the United States?
Think about 9% or so.
Yeah.
9%. Oh my goodness. Yeah, I think I remember it never quite got to double digits, if I remember correctly, but like 9%. Yeah, wow. Yeah, I can't say we've hit nine here in by any means in Japan, but you know, given how low things have been here historically, seeing I think like you know even like four upwards of 4% at a time was sort of like wow. You know, it was like very shocking, and even while we had our previous head of the BOJ, Kuroda, who has now been replaced by Ueda. Um, he was sort of, you know, on his way out, thinking about how he could set up his successor for this sort of monumental change. Like we were already talking about, you know, oh my gosh, like is this inflation here to stick around? Is Kuroda going to make a change? Blah blah blah. I mean, ultimately ended up being that we had to wait for his successor to come in, and you know, part of that is you know a lot of like the political and you know social considerations that you have here in Japan about not wanting to shake the boat too much. But eventually, right, we got to this point and we were looking at it, expecting it for you know years, since all the cost push and supply chain driven you know sort of global inflation kicked off. I think if I remember correctly, it was probably right around the start of like the whole, you know, Ukraine war and China, you know, supply chain like shut down right across the world in like 2022. Was it like that was probably when these things started to kick off, if I'm remembering correctly?
Hmm. That's right. Yeah.
Yeah. So you know, eventually that made its way over and sort of trickled into sort of the inflation that we experience here in Japan. And you know that's been a good thing, right? Because we've been waiting for that for the longest time. So ever since like the turn of the century, I think GDP growth in Japan has been like a yo-yo, right? uh Positive to flat to like slightly negative. You know, I think last quarter marked two consecutive quarters of recession, and or two consecutive quarters of GDP decline, which technically put us into a recession. And then we lost that spot to Germany as like the number three economy. You guys mentioned it in the intro.
Yeah.
um yeah, yeah, all that is definitely true, but I think part of it is also due to the way I think they measure these things. Like, so the GDP one in particular, I think, is that on a dollar basis? I'm pretty sure it is, which is part of the reason why, like, with with the way the currency has weakened here in Japan, like the the GDP situation sort of seems expected to me, right? We're at like 150 yen to the dollar, so um, probably like the weakest it's been in modern times. So yeah, as of right now, Japan's GDP is not like in the best position that it's been in modern times.
The other area that Sachin and I really wanted to touch on here has to do with demography, which, is a long-term structural challenge that Japan has been facing. The fertility rate in Japan right now is just 1.34 children per woman. And though, you are kind of a walking exception to this, immigration to Japan remains pretty low. And so that's, I think, led me to two questions for you. First, is living in a society that's aging as quickly as Japan's noticeable, even just when you're, walking down the streets of Tokyo, for example? And then second, is the burden of that rapidly aging population imposing, any kind of a notable strain on Japan's finances? Strikes me as being a, very difficult challenge that the government there needs to deal with now.
Yeah, I mean, I think you raise a good point. Like, this has sort of been the final boss that all
Huh.
of the developed countries in Asia are like currently grappling with. I think Korea has it a bit worse than us right now, in terms of how quickly the population there is shrinking. China is in, part beginning to experience the early signs of this now, and I think that's sort of been one of the reasons why investors looking at China in like the long term, I mean, excluding obviously like, the real estate and asset, the real estate asset bubble there, that is its own beast. But in terms of, population decline, like it's really been like a pivotal turn, right? For China. China, being like the massive country it is and the engine of productivity that, we've known for the better part of our lives, seeing that turn and seeing the equity markets shift there is pretty monumental. But bring it back over to Japan, Japanese demographics, it really has been, you know, like this for, I would say like over a decade now. It's just been in this state of like steady decline here. And part of the reason I think is because of how much, the population pyramid here, it's like a kite, right? It's like a kite with like two corners on like ages like 50 to 60, right? Being like sort of like hugely oversized, with the way sort of the population boom happened, in like the 80s, and precursor to that would be, I guess, like post-war era and stuff like that. But yeah, like, so you've got this diamond shaped kind of kite looking population pyramid with a ton of soon to be dependents, right? They're going to be drawing on these like pension funds and savings, right? Which Japan seems to have a lot of cash savings. And you've got this like dwindling workforce of like, domestic Japanese, and like, maybe mix in like a little bit of like immigrants from overseas, including myself. And we're expected to sort of support that entire structure. So what can we do about this? Well, it's tough, right? Like, if I had the answers, I don't know if I'd be like on a podcast. I'd be trying to do something about it. But at the moment, it's really tough. So what can we discuss? We can probably talk about some of the remedies that like have been put in place by the government to sort of alleviate those burdens. I think they've done a lot of work, and I'm not the like biggest expert on this subject, but like they've done a lot of work on subsidies from the government side for family planning, and like supporting like young families to have kids, and they've also tried to redistribute wealth through a variety of different programs that sort of reallocate tax revenue to the smaller and lesser populated districts across Japan.
Thank you, Revant. These have been really interesting insights. And just to kind of sum this all up, could you boil down for us just a few of the big macroeconomic risks that you see Japan facing in the years ahead as it navigates all this change?
Given that we've discussed, a variety of different things, we've talked about like the demographics of the country. We've talked about, um, the BOJ's experimental policies. Like, there's so many sources of uncertainty for Japan from here on. I think
Yeah.
one of the things that sits at the front of my mind is sort of like real wages and what will happen to them if, you know, the like the economy doesn't actually react well to the BOJ raising interest rates, right?
Hmm.
There's a slew of risks that I can just think of, and I'm gonna like sort of touch on all the ones that I can like drum up off the top of my head. So yeah, one of the ones we'll start with this one. We'll start with the real wages. Um, Actually, it's very timely because Japan has these annual wage negotiations between labor unions in Japan and like the corporates. It happens in the spring. They're called the Shinto wage negotiations, and this year's were actually in advance of the BOJ decision, and were one of the, I think, key inputs for the BOJ to sort of decide whether they were ready to raise rates. And it was pretty good. I think, like, overall, economists and market watchers on the street were expecting something like, maybe max like 4.5, 5% year on year wage growth in nominal terms for Japanese workers involved in the Shinto negotiations. But we actually hit like 5.3, right? So that was, a pleasant surprise to see that, with all the ongoing inflation and, the yen weakness, like we are seeing corporates shell out a bit more for their employees. And although, only like I think something like 16% of Japanese workers are actually in one of these labor unions. So, it's not representative of the entire economy. It is still a hugely good sign because you've got representatives in the Shinto that include workers from like some of the big corporates like Toyota and other car manufacturers, which are some of the bigger companies here in Japan. To see that, I think, was like definitely a morale boost for workers. But that said, right, you don't have to go far online. Just read a couple like Substack articles or go on Bloomberg and check it out. But real wages have not kept pace. In fact, real wages are flattish, if not slightly negative, in the face of all the inflation, right? And that's definitely felt here. I think like people's purchasing power has gone down significantly. Even domestically, things are getting expensive very, very fast. And this sort of win for Shinto wasn't like, a marginal gain so much as making up for what was lost as virtue of these this uptick in inflation. So that is one dynamic at play here, and we hope to see that wages continue to keep pace with inflation. But also, as I was getting into, is sort of how much it's going to hurt, right? When interest rates move from negative to positive, and then from flat to maybe not flat in the longer tenors, right? And it'll directly impact, I think, like real estate and people in Japan who are accustomed to these really really low rates of borrowing money to like take out loans for their homes, and we'll just have to see whether this pivotal shift is going to really normalize the economy, or maybe they've grown so accustomed to the way things work in the previous model that it really generates some negative unexpected shocks going forward. Other than that, things that I can just like list off real quick off the top of my head, we've got weak currency, we've got, which is really impacting me at least, on those flights back to the US. We've got, which in part and parcel, is definitely due to that interest rate differential between Japan and the United States at the widest it's ever been in recent years. And then we've got the demographic issues and the population decline, which I think we're starting to see combated with immigration uptick in Japan. But as mentioned before, we've definitely got a lot of hurdles, as immigrants coming into the country because of language and culture barrier, and those things will take time, obviously, before they really open up, I think, to the outside world. But we are seeing the change, and I think it doesn't take a lot to sort of see that. Just hop on Instagram Reels. I feel like everyone I know is in Japan.
Yeah.
So definitely been an uptick of interest there. But yeah, that said, with all the problems and risks on the horizon, we are taking it in stride. And here in Japan, it's always been like this forefront of uh, experimental macroeconomic policy here. So I feel like we're like the testing ground for what happens to societies as they reach sort of a mature stage, right? Where corporates reach a more mature stage, where the demographics reach a mature stage. Japan is super interesting, and definitely a place that like people all over the world can learn from. And yeah, I'm just really excited to be here and to be a part of it.
Yeah, that's great, Revant. These are all really interesting insights. And just one final question for me before we conclude. In a few words, what advice do you have for people in the States who might be considering working internationally or pursuing an adventure similar to maybe what you're doing now?
Yeah, great question. I would say that one thing that it's important to keep in mind, right, is regardless of what part of the world you're on, the the expectations will be high, right? So even though, I have taken this path and I've had my journey to get here and all that, when I am in, a professional setting in Japan, I am still going to be held to the standard of the locals. And when I was in Hong Kong, it's the same thing there, right? So that means having this desire, like innately, to be culturally competent, to learn the local language if you have to understand what's going on in the country, in the world. It means you know being able to talk intelligently about things that people who are from the region would see as like matter of fact statements, right? Like, you know, learn all the prefectures in Japan, learn about the basic history, right? Understand pop culture references, learn about what news media is trending among like financiers or just people in general, right? These sorts of things require an immense amount of effort on your part. And I think that's the thing that like people don't really get. I think like initially you feel like you're kind of just on this like tour of the world, right? Like you're on like vacation plus work, right? But it's not, right? Like you really have to assimilate and understand the culture of the place that you're ending up in. And if you do that and you bring the insights that you have with you from wherever you're from, then you're seriously going to be a weapon. I think like that's the thing that people need to understand is like it's hard work, but if you can find it within yourself to put that extra mile in, it will, hone you in ways that like you could never anticipate. So I definitely recommend that path to anyone, but I also want to caveat it with, this expectation.
Well said. Well said. These are all wise words, Revant. So, look, man, thank you for joining us on Toast and Topics. It's been really great to hear from you and to get some of your insights on Japan. And given our track record with this country, it's likely that we will be returning to the macroeconomic situation in the months ahead. So, hopefully, we'll get to hear more from you at that time.
Of course.
Appreciate it, Revant. And there's more Toast and Topics coming your way next week, where we will be covering recent changes in standardized testing policies across elite universities in light of some of the changes that have taken place. Thanks for listening to Toast and Topics. Before signing off, we wanted to disclose that the views in this podcast are our own and are not reflective of any institutions that we're associated with. They should not be considered investment advice. If you like what you heard, please rate, review, and share with a friend or family member. We'll see you again next time.